Good morning. Good morning. Jim Cagnina from Infinity Futures and NinjaTrader Brokerage, NTB. We have the webinar set up. Go to meeting, not go to. I'm all discombobulated this morning. Let's start over completely. We got about 3 minutes before we start, so I could fumble around for 3 minutes and it's game on. Paulie, how you doing? Sam, thanks for being here. Robert, type in I can see a NinjaTrader chart. Actually, the whole dashboard, the whole kit and caboodle on NinjaTrader should be on your screen right now. Robert says yes. All right, awesome, fantastic. I got to shake off the cobwebs. I took an extra vacation day. I took my first real vacation day this year on Tuesday, only because I needed to recover from the Indy 500, which was Sunday. It was awesome, by the way. If you haven't seen one of these races in person, you need to do it. You shouldn't need to do it, but put it on your list. It's real fun, a lot of fun. All right, we'll get started right on time here in 2 minutes. And I'm glad we're in business right now. Kind of a slow day today. Hopefully everybody had a long, nice, relaxing Memorial Day weekend, wherever you are in this world. Joe asked, did I go? Did you go to the rave? I didn't go to a rave, no. I think the ship has left the dock on that one. I think I'm a little too old for raving anything, but it was a beautiful day. It was a beautiful, it wasn't too hot and it was sunny. You got to hang out with, 120,000 of my close friends. I understand that it might have been the largest gathering of people post-COVID there's been so far in the whole world. I don't know if that's true or not. Someone said that to me. Yeah, no, I did. I went, Joe, sorry, I'm losing it. I did go to the race. It was fun. I took my two boys. We had a great time. Indianapolis is a nice place. Don't discard it. Don't discard it. We'll officially get started here in a minute. For those of you who aren't used to my banter, welcome. My name is Jim Cagnina with NinjaTrader. I am broadcasting live from the new downtown Chicago office, beautiful office, overlooking the river, right off of LaSalle Street. Super cool. Glad to be here. Love coming in. Love coming in. We're almost there. 9 o'clock. Let's get rolling here. All right. I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition is money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Cagnina. Now, that was just a little bit of a tongue-in-cheek at the end, but not really. Stress in life matters, be in a good place. And again, that's my personal definition. We know everybody's unique. Everyone's different in this world. Everyone is, like I said, is a unique person. So if you're not sure where you fit on the risk capital curve of things, reach out to me or any of the sales reps here, customer service reps here at NinjaTrader, and have that conversation. I mean, have that conversation. These guys and gals are, they've passed a rigorous Series 3 examination. They're NFA members, CFTC registered, go through continuing education on a regular basis, and there's a lot of stuff there, and equally important, they've been talking to traders and investors like me and you every day, 10 hours, 8, 9, 10 hours a day. So feel free to reach out at any time. We are in simulated live mode today, demo mode today. So all these trades are demo trades. I do have the NinjaTrader platform up. Any questions on risk, go ahead and type it in. And we'll go from there. This is the latest and greatest, Joe. This is the one you want, 64-bit. Let's take a look at, let's get in, it's low volume day today, right? I have a little quote board on the upper right, 230, 200, almost 300,000 so far today, very low volume day. Tight range today. You know, what are we at? 18, 19 handles, high to low. You can see that on the volume profile information as well. But let's start let's start off. Let's take a look at a daily chart. Here's our daily chart. Bull market, raging bull market since 2008, right? The Fed's done this. Interest rates have done this. You know, we've had some hiccups along the way, but here's the picture today. This is the daily chart today. E-mini S&P, the classic. I don't have the micro, I have the classic up today. And it's a candlestick. I don't have anything other than candle on this chart. And, you know, scratching my head, well, why aren't we doing technical analysis on this chart? Well, we're going to do the technical analysis on the 10-minute chart. Right now, I want to know what my bias is. Am I bullish? In other words, do I think the market's going to go up? Am I bearish? Do I think the market's going to go down? And so I use this longer term point of view to kind of get my mind right in terms of what it is. And I have some lines drawn on there, a couple of dojis that I have outlined. But really, the most important part of this chart right now is, you know, we've hit an area of what I'm going to call resistance, right? This top blue line here, in my mind, is resistance, right? We tried to close above it once, we tried to close above it twice, and then a third time, couldn't do it. Sellers came back in, and you could take a look at this candle, and you could see this pretty big wick here relative to the body, this red candle from yesterday. A big wick here at the top relative to the body suggests that that sellers overwhelmed the buyers and ended up pushing this market down like a plunger. And so that's what, again, this area of resistance is holding, right? So, okay, that's the top side. What about the bottom side? This old line I drew where it was, you know, support, this old support line I just drew all the way through here. I don't know how relevant it is right now, but this middle line in the middle here, I do believe is relevant. And I'm going to drag this a little bit further out, because a lot of times what I've seen, not always, but a lot of times, you have a situation where resistance becomes support, right? So we had some short-term resistance here, 1, 2, 3, 4, 5 times. Finally, we broke through. And now this line, extending this line through, it's become an area of what I'm going to call short-term support. So again, it's a range, it's an area, it's an idea, it's a point of interest for me right now. So we're consolidating between these two, 1, 2, 3, 4, 5, 6 days, low volume, consolidating between these two. So now all of a sudden my bias isn't necessarily bullish or bearish, right? It's sideways, which means we could look for trade opportunities both on the long side and the short side, right? If I had to pick, maybe I'm slightly bullish. There's some Fed speakers coming out today. Let's take a look at what's on the agenda today, actually, before I just make it up. You know, oops, I have Wednesday, June 2nd twice. It's only June 2nd once. Motor vehicle sales, MBA mortgage applications. This is important to me. You know, this whole idea of interest rates, and the you know, the new home construction, existing home sales, mortgage applications, refinance applications. This tells me a little bit, right? It gives me information about the state of the economy, and, you know, what the Fed might be thinking, and what people are doing with their money, right? Are they buying new homes? Are they moving? Are they staying? Are they refinancing? And, you know, this particular number, the MBA mortgage applications, and there's a whole bunch of economic releases on this kind of data. You know, I just cut and paste the highlight there. Mortgage applications decreased 4% from 1 week earlier. So, you know, I'm keeping my eye on that number, as these numbers are kind of important to me. I'm going to go ahead and type in this URL in the Q&A box. Hopefully they can get passed on to you. That's just kind of where you can get more information from the MBA mortgage applications newsroom, they're calling it. ADP, again, ADP is kind of, you know, an employment kind of number. You know, there's a lot of employment kind of numbers, but keep your eye on them. See what happens. Prior, minus 4.2, and today it was minus 4%. Okay, so that's kind of an interesting, you know, ADP, a lot of people use ADP to report, so they have a good database and they have a good basis for their analysis. Red Book, I don't have any data on it. A couple of Fed speakers are coming out today, and then Beige Book. You know, the Fed speakers kind of do the circuit and talk about how great things are going to be. So nothing really to write home about from that point of view. Let's toggle over to the 10-minute chart. Again, you could have as many of these charts open as you want, or as few of these open as you want. To add a chart, it's really simple. This control panel at the top here, this rectangle at the top here, is very powerful. You go to new, it doesn't look like much, but it's very powerful. You go to new, and you could add a bunch of stuff, right? You could add a new chart. You could add, another Superdome. You could add another quote board, whatever you, all of these things I would experiment with if you're using a demo account. If you have a live account, and you're still not 100% comfortable in how all this stuff works, then go ahead and just, log into, in sim mode, and you could kind of practice and not break anything. In any event, so that's on the right-hand side, I just have a little quote board, which is fully customizable. You could add a whole bunch of stuff on it just simply by right-clicking. And then you could, add instruments, and you could do, a whole bunch of different stuff with the columns. A lot of great data you could add. Really simple to add. Click at the top, then you add it, and then it'll all be good. Real easy. I have it simple. I have a real simple setup right now on mine. I just got last price, net change, daily volume, unrealized, P&L, and then position size. We don't have a position yet, so we're just going to wait. It's 9:08. We're going to have another candle right now. Let's take a look at the volume profile right now. We're trading up, we're developing what's called a second distribution, right? So on volume profile just tracks the volume at each given price level throughout the session. That's all this is doing, right? It's doing these little two tick histogram bars, and each histogram bar represents the volume that traded in that 2-tick increment. And so we see what's called a double distribution, right? We have one big node at the top, one big node at the bottom. And the point of control here is the longest histogram bar, and it's on the bottom node right now. I expect that to change pretty quickly because it seems like now after the open, the new paradigm is we're trading higher, right? We're trading, I don't know, 8 handles higher or something like that. So as volume accumulates up here, and I'll go ahead and let's do some crosshair work here. This could very easily become the new point of control, right? And the volume of that histogram bar overtakes the volume of this one, then it becomes the new one, right? So we've seen what I'm going to call a shift in pricing from early this morning till the open today, right? We're trading higher right now, and we're kind of developing a new profile, and it's something we want to look at and keep in mind as we decide, are we going to go long or are we going to go short today? It's kind of number one. This divot here, I'm going to call it a divot. So from 04.5 down to 02 3/4, that's kind of an area of weakness, right? Less volume occurred there than anywhere else in the meat and potatoes of the whole distribution. And so that's we're going to call it market weakness, and sometimes it gets filled in and sometimes it doesn't. I don't know if there's a magic, it's if it was less volume than this relative to the peaks, I would say you could even say it's market rejection, right? Nobody wanted to do a deal there, but there was some volume there. So will it be filled in or not? Maybe not. I don't know. I don't think there's any magic in the tea leaves that tells me, oh, these areas are always filled in. Low volume day though, a lot of times in a low volume day, you tend to end up with a normal Gaussian distribution, bell-shaped curve with respect to the volume profile, which suggests that it will get filled in, right? That would suggest that if we come to the conclusion that, hey, there's, from an economic release point of view, and even from a surprise point of view, end of a holiday point of view, it's summer point of view, it's going to be a regular day, right? There's nothing going to be unique about it. We're not going to break up out to infinity. We're not going to crash really low unless there's something spectacular that happens we're unaware of, unplanned news, as I call it. Mike says my screen is different. My charts are in black. I'm just showing my screen here. Hopefully everyone sees a white background on my charts. I don't. That's a little crazy, but anyway, I'm not sure what's going on there, Mike. You might be logged into your own software, by the way. I'm looking at that, maybe. I don't know. Anyway, I have the white background going on. So in any event, the oscillator of choice I've added at the bottom here is called the Commodity Channel Index. And there is all sorts of different types of oscillators that you could choose from and use them as part of your technical analysis of effort. You know, I'm a simple kind of guy. I want to know where the volume is. I want to know what I want an oscillator to tell me momentum, and that's it, right? I'm going to look at the candle. You could add moving average crosses and Bollinger Bands and VWAPs and all of that stuff for sure. But I'm going to go ahead and, but I'm not going to add that stuff right now. Now, we could add it later for academic purposes, but you know, it's really easy. You're going to right click. Again, you right click the places here, and things could pop up. So here's the indicator list. Here, you know, there's a whole bunch of them. And you know, if your favorite should be on there, and you're simply going to just select it and then hit the add button at the lower left, right? Hit the add button at the lower left, and then you apply it, and it'll add it to the chart. And it's that simple. So I just added a second. Let's just take a look at that, what that looks like. I just added a second oscillator, the MACD, which I put below here. Okay, so now we have two oscillators on here. I mean, you know, that's okay. I mean, you could remove one easily. You know, the same procedure, right click, and then you're going to go in your indicators, and then it'll open up that new window, and then you just select the one you would like to remove. I'm going to highlight it, and I'm going to remove it. Easy peasy. That's how you do it. So I had this preset up ready to go earlier today, and when I save it, now this is very important. When you close this, you know, the control panel on the upper left, it's going to ask you to save everything. If you close individual windows, then you might lose them. So don't do that. Close this thing first. This control panel thing up here at the top. Okay, so let's take a peek here. You know, I'm really interested in. Well, we got another. I don't know. It's 9:13. We just got a new candle. Let's kind of expand this up a little bit. So we've had our 840 bar was substantively down, right? The 830 bar, the open bar, not much happened. A little tiny bar, you know, a couple of handles. Then we had some selling that came in at 840, and then we had buying that came back. So these two are almost equal and opposite candles, not quite. The buyers were a little stronger than the sellers in these two time frames, but they're pretty close to canceling each other out, in other words. And we're kind of back to you know, where we started from almost, but from an open point of view, from 830 point of view. You know, we're back to where we started, a little bit higher. So the market's tending to trend higher. CCI is 92.6, right at that 100 mark, right at that 100 mark, suggesting maybe we could be bullish here. So what I want to do is I want to find a place to buy, right? I want to find an area to buy a contract, and I don't want to go. I just don't want to do it on a market, right? On a market order. I don't. My personal preference is pick a place, be patient, and let it go, right? And let it go. So one more thing I'm going to add here before we pick a place. I'm going to draw a Fibonacci retracement here. I'm just going to add fib line, and I'm going to just do an estimate, high to low here. It doesn't have to be perfect. You know, we're just looking for general areas. And if you want to go ahead and edit this thing, you can. You could go to properties. You could change things, colors, and extension lines and all that stuff. I'm just going to get rid of the 23.6%. Doesn't help me. I'm going to get rid of the 76.4%. Doesn't help me. Hit OK. And there we have it. So now that I have this area located, it gives me more clues, right? Another clue on maybe where I want to enter. And maybe I want to see, and I went high to low, right? I went the low since the cash opened up, and to the high, which is, you know, two candles later. And so now I want to look for a little bit of a pullback. You know, let's be aggressive. Let's say, you know, 42.05 and a quarter, right? 42.05 and a quarter. I'm just going to put my mouse over here. Do I have everything set up here? I got sim cag sim. All right, and I've sent the order. Now I have the chart trader on, so it shows on my chart actually where my order is. And the idea is here, I want to be patient. I want the market to pull back down, and then, you know, give me a couple of extra ticks on my entry, right? I'm not going market order, and then I'll go ahead and put some stops in and targets in. Now, the alternative idea here is a counter trend trade, right? The alternative idea here is a counter trend trade where you're going to say, hey, you know what? The high is in for the day. which I don't necessarily subscribe to that, but I want, I'd like to sell at the high and put a stop in, somewhere up in the cloud in here, because I think we are going to gravitate back down toward the original point of control, which was no longer there, by the way. It's jumped up a little bit higher. So we're trading around the new point of control at this very moment. So that's this is my thinking right now. So I want to wait. I want to be patient. We're about 3 handles away from our entry, which isn't a big deal in this particular market, and we could wait and be patient. Joe, I'll get to that in a second. Hang tight. Any questions at this point? We're going to toggle over and look at some of the other markets. I mean, right now the NQ is, again, low volume. Low volume, not moving that much. Bonds, 158, 13. Remember, bonds are traded in 30 seconds. They're not traded in quarters or in tenths. So, an example of a market that's traded in quarters is the ES that we're looking at right here, quarter points. Bonds are traded in 30 seconds. It's a little weird. Don't ask me why, but well, it isn't weird, but it's different, right? 32 ticks per point. And then crude oil is traded in tenths right here. So we're, 68.17. All right, so let's just toggle over. We could toggle over, or we can create our own chart. I'm going to toggle. We just go over to NQ, and I'll pop up an NQ. It's really, really, really quick. Centered a little bit. Now the picture here is very similar, right? Very similar picture, stock index futures, although the NQ kind of does march to its own tune. And I am actually, for other reasons, kind of bearish on the NQ. So here I would consider a counter trend trade. And if the NQ, the classic NQ, is too big for you, then consider the micro NQ, right? Consider the micro NQ, and that will give you an idea. Let's just go ahead and look at the candles again. So crosshairs, easy to do. 850 was, all right, so let's go to the 840 candle. The 840 candle, the 830 candle is nothing. The 840 candle looked like a doji, right? The body is very small. The open and close of that candle is almost the same. Long wick on top, long wick on bottom. And in this particular case, I would interpret that doji with those big, I'm going to hover my crosshairs over it right now. Actually, let's just go back to the pointer. As market was indecisive. It didn't know. It's market uncertainty. Buyers and sellers didn't know which direction to take this thing at that point. And the next bar over, 840, again, shot up pretty high, did the opposite of what the ES did. And then we kind of had sellers come back in, not quite an equal and opposite, but interesting candle nonetheless. So then kind of sideways since then. A lot of buyers coming in. These long candle wicks are telling us there's a lot of buyers coming in. Alternatively, we have a lower high, and a little lower high. And that's in my mind also kind of a negative thing. When you have 3 or 4 successive lower highs or 3 or 4 successive lower lows, then that's a thing. That's important to me. So, all right. So let's go talk about that. Actually, you know what? I am going to try to get a counter trend trade in here, and I'm going to have my stop at new highs. And so instead of doing it, we could do a dome, but I'm going to go ahead and do it from the chart. And what I'm going to do is I want to see, not a higher high, but an almost higher high, right? So I'm right below that wick, right above that wick. I'm right there. So if I really wanted to be scientific about it, I would be right there, right? So right a little bit lower than the high of the previous candle. Again, I'm going to be patient. I'm going to wait. And then my stop loss is going to be, this is no longer, a counter trend trade. I want to give myself at least 6 to 8 ticks above the high of that candle. In this market, that's even too tight sometimes. So I don't know, maybe we'll bring that down to 11. We'll bring it down to 11 and then see what happens here. Oops, one more tick up. Sorry, it's been a long weekend. My mouse finger is like There we go. All right, we did it. All right, so now we have two different things going on. It's like, hey, you're going to go long one stock index and short another stock index. And my answer is yeah. And the reason that this is okay, because the NASDAQ and the S&P, they're stock index futures, but they're different, right? One's tech, well, not even tech, non-financial, I would call it. And the other, the other in the S&P 500 is, is the big gorilla, right? I mean, that's, everyone follows it. That's a bellwether benchmark stock index futures. There's 500 stocks in there, and large cap stocks in there, and so it behaves differently, and sometimes, in my experience, in my opinion, a lot less volatile than the other ones do, right? A lot less volatile. So we're going to hang tighter. We're going to see what. There we go. So, all right. So now we're in with and let's toggle over here now to the NQ. Okay. So there I just toggled on the dome. Really easy to do. Lower left-hand side, you could toggle between instruments. And that's where we're at right now. So notice something that happened right now, right? As soon as we got short, our P&L went against us, right? And you can see the P&L up here, unrealized P&L at -80. Unrealized means it's an open position, right? If it was closed, then this unrealized turns into zero, and then it becomes a realized P&L, right? So as long as your position's open, it's unrealized P&L. That's kind of the nomenclature of this. This is how it works. So that's where we're at, but we're negative already, right? What happened? Well, you're almost always going to be negative when you enter, at least for a small period of time, because it's impossible to buy the low or sell the high, right? It's impossible to buy the low or sell the high. It's just too, it's a blind squirrel will get an acorn every once in a while, for sure. But, most folks don't do it. So again, the concept is what we're looking at here. And the concept is pick a position, put your stop order in, and then be patient. If you're wrong, which we may be, we may get stopped out, we may take a loss, we may be wrong. Alternatively, we might not be. So the hardest part right now is to hang in on this trade, right? The hardest part right now is to say, wow, look at that P&L, $200, 195 against us. This is really bad. I want to get out. I made a mistake. Well, don't be so sure you made a mistake. Maybe we did. Maybe this is a bad idea, but I give your trade some time, give your trade some space, be patient. Again, my opinion, for what it's worth. DJP, I think there's 10 ticks deep here. 10 ticks deep, 1, 2, 3, 4, 5, 6, 10 ticks deep on the trading ladder. You could have an option where you just pay for best bid and offer instead of the 10 ticks deep, totally up to you. I don't know that I see a lot of magic in this particular volume numbers, other than how thick is the market, how big is the bid and ask, how many are on the bid and ask, how thick is it? Is it liquid enough for me to trade? And as opposed to saying, oh, there's 20 on the bid at 695. That means something. That doesn't mean anything to me. This moves too quickly for me to really get a handle on it. So I know that's not your question, and I kind of went around and around. Well, I'm going to talk more about volume profile because we got a lot of questions on that. All right. So far, our counter trend trade idea is not good. Our ES position, I do not think we got into it, but we could always check that and just toggle back and forth. It's really, really easy. Don't have to open a new dome if you don't want to. You could if you want. Yeah, we're still pretty far away. I wouldn't change it yet. It's only 9:26, so we're going to stick that. But since we are in the soup right now, we're going to go ahead and focus on NQ and see what happens here. So a close up here. We got another 4 minutes. And here's what would be really problematic in my mind. And then we'll look at the other stuff. So we had a high here, and then the very next candle where I'm moving my cursor over to, that was also the top of the body. So we have two tops of the body here. If we start closing candles above here, then yeah, we're probably in a little bit of jeopardy right now. So let's see what happens here, because I'm just going to leave my cursor here kind of to show where the line is, right? So 700.5. If we actually close on a candle there, then I'm a little worried. If we just trade above it, okay, I'm not too worried. But let's just see what happens if we get a close up there. Okay, so Christopher asks, all right, so it's a good question. So Chris asks, what is the added value of the Superdome compared to the chart trader? So it's, it's really a preference thing and a technique thing. I prefer trading from the chart always. I have forever. I mean, if you go back and look at my last, 2 years worth of YouTube lives or webinars, you'll see that, that's what I prefer to do. Because I like to, again, I like to kind of match up my orders with what I see on the chart. My stops on areas of interest, my targets on areas of interest, and that's my personal preference. The dome is awesome. I mean, you just click and go. It's real simple. The benefit of the dome is you could dissect the price point you want with a single click. Whereas in a chart, you saw me struggle a little bit putting that first trade in here. I had to wiggle, I had to adjust it a little bit, right? So speed and accuracy of the dome. For patience and slower kind of order entry thought process, in my opinion, is the chart. Again, personal preference though. Okay, so let's go back to the volume profile here. Yeah, so this our NASI trade's getting a good thing here. So we're pretty close in about another minute here to see what happens with our close on this existing candle. But the way the volume profile, the important part of the volume profile, I have a lot of questions on it in the question box. So let me just kind of clump it all together. This dark blue area is called the value area. And that's one standard deviation worth of volume. That's all. If you remember your sophomore year algebra class, which I don't, but you might. It's one standard deviation worth of volume. That dark blue, it's called the value area. The light blue above it is called prices above value, and then the light blue below it is called prices below value. Not very creative, but someone came up with that name and thought it was a good idea. And in this long, I don't know if it's brown or orange on your screen, that's called the point of control, right? That's the point of control, which is simply the longest histogram bar. In other words, the most volume is traded there, right? At this price point level. And it just gives you kind of a visual, I don't know, guide, right? It's just a visual thing. And there's no mathematical magic other than in normal distribution days, oftentimes they do tend to act like a magnet. Now, not always. So don't say, oh, I'm going to go short here. I'm going to go ahead and buy one at the point of control. But a lot of times it does kind of trade around that area throughout the day. And this is very much what's a market profile idea that's kind of been translated into volume profile. And I think volume profile is better for more contemporary short-term day trading, and then the market profile might be better for long-term position trades. Again, that's been based on my experience. Peter, I'll get into that for a second. So let's finish up here. So keep in mind on the volume profile though, it's dynamic, right? And it's giving you areas of interest, right? And the next area of interest here, and let's go ahead and get the crosshairs back out, is the second minor point of control, I'm going to call it, right there. A lot of volume was traded there, right where we're at right now, maybe a little bit north of that. And so that's an area of interest to me, for sure. Maybe we should have entered there instead of entered where we're at. And maybe that's a mistake. Maybe that's what I'm going to write down in my notepad. It's like, Jim, wait for the second point of control to enter as a conservative entry. And that's that's a thought that I'm having in my head right now that I am going to write down, and we'll see it on my notes tomorrow. In any event, the CCI, and so the question someone else asked was, how do you use that in conjunction with the CCI? Well, the CCI is very strong right now, and it's over 100, right? So all these oscillators, including the CCI, they oscillate around a point, right? A zero line, right? And so we have a zero line on the actual CCI. So the zero line is kind of the middle point. And then the magic numbers that aren't really magic, but that people think are magic, are the 100 and the -100, right? If the market's over 100, it's thought, well, on the CCI, we're over 100, we're overbought, whatever that means, whatever that word means. And then if we're under -100, we're oversold. But those are just kind of, those don't mean anything to me, really. What I like to see is a quick cross over the zero line. Okay, so here was a cross from low to high over the zero line, and then within an hour we were well over 100, right? Well over 100. So it's a relatively quick move, and the chart up above it reflects that, right? The chart above it reflects that. For our trade idea now, really what we need to see is the CCI breaking down below 100 quicker than slower, right? That's kind of what we want to see. And then if it gets to zero or below zero, even better, right? Even better. So, but right now it's not helping us because we're in a position and we're on the wrong side of the position, right? We can only kind of watch and see what happens at this point. Now, one of the things we have in our favor is literally it's a low volume day and doesn't seem to be a lot of stuff going on. So the $1 million question is our stop in the right spot or not? I hope it is. And then can we be patient long enough for sellers to kind of bring this back down into the value area? And the value area is right top of the value areas where we got into the trade. And that's not an uncommon technique, right? For a more traditional type of bell-shaped distribution, a normal technique is, hey, let's sell a contract at the top of the value area, or let's buy a contract at the bottom of the value area because we're hoping it's going to gravitate back toward this magical point of control. It doesn't always happen that way, but sometimes it does. Okay. So Peter's asking about the Forex market. So volume indicators for the Forex markets like Euro US, which I trade on. So, all right, so Forex, it stands for foreign exchange for those who don't know what that means. So we're trading currency pairs. They're called currency pairs, right? The currency pair, or the market, is based on the price differential between two different sovereign currencies, right? So one good example is the euro currency, right? The Europeans, most of the Europeans use the euro as their cash and is their currency, and the U.S. uses the U.S. dollar, right? The U.S. dollar, and the price difference between those two is a market. It's called the currency pair. And there's a whole bunch of different ways to trade it. You could trade it on the CME group, right? So you could trade it with a futures contract, just like we're doing the NASDAQ, or just like we're doing, treasury bonds or crude oil or whatever market we're looking at. So it's in that particular case, it's traded on that futures market, that the Euro FX futures contract, or the British pound sterling, or Swiss franc, Canadian dollar, New Zealand dollar, Japanese yen, whichever one you want, whatever currency pair you want. They're traded on electronic exchange, the CME group, right, on their Globex marketplace. And then you get to see a depth of market, right? You'll get to see bids and offers, and it's a transparent first come, first serve process, right? The exchange is determining, buyers and sellers are determining price, right? On over-the-counter Forex, you don't get that volume because on over-the-counter Forex, there's all these different little private exchanges going on, right? You have it's called the over-the-counter market, right? It's not usually it's not at a regulated exchange. It's done on these over-the-counter markets, and somebody decides to make a market and develop a trading software, a platform, and it's a market. So there's a whole bunch of different cash Forex over-the-counter marketplaces, and as a result, you don't know what the total volume is. The bid-ask spreads are all different, so it's a little wacky in my mind. Why people prefer, again, my opinion, but why people prefer over-the-counter cash Forex versus there's other advantages too on the future side, other than a transparent, highly regulated exchange where there's a lot of bids and offers, a lot of buyers and sellers, and it's first come, first serve, first in, first out. It's FIFO. It's totally fair. Doesn't matter how big or small you are. Anyway, I'm off on a tangent. Sorry about that, Peter. So I just don't, I'm unaware of any really good volume profile, volume indicators for Forex markets because of that point. Thanks, Peter, for that. Appreciate that. Okay, so going back though to the volume profile in relation to last night's hand candles in the top section. So I have the volume profiles, set all the way back in time, right? To the open. It's a 23-hour session here. You could set this volume profile to whatever you want. I mean, you could set it to a different thing in the properties. I'm not going to go into that too much, but I did. These are all the drawing tools. Order flow volume profile in the drawing tools gives you the ability to click and generate little mini. I wanted to show this. I just figured this out recently, but it gives you the ability to click and just select a range and create a mini volume profile. So the way I did that is, I just right click my mouse, and then I literally went to drawing tools, and then I scrolled down to where I see order flow volume profile. Select that, and then I could simply make my mouse. I just click to the area I want to select. Oops, I did that poorly. My bad. Try it again. Right click. And I'm going to go to my drawing tools. I'm going to go down to order volume, and I'm going to click and drag over to the area I want. And it's going to go ahead and superimpose that volume profile from the period I'm looking for, right? Instead of the 23-hour period. And so, some folks will say, yeah, I want to see it from the open until now. And it's a different types of traders. There's different things going on. It's going to help me with my analysis a little bit better. That's a little ninja trick that I just discovered recently. It's very helpful if you want that type of detail. And then just to get rid of it, you're just going to right click and remove. Super easy. Learn something new every day. Everyone with me on that? Reza asks, is tick volume any good for Forex? No. Do I got to explain? I don't know. I don't know if tick volume is good for anything. I never figured, in all seriousness, I never understood it. I never figured out. It's not that I don't understand it. I never figured out how to apply it in my world, because I'm looking at a 10-minute chart and I'm being patient. I mean, we're still in this trade, right? We're still in a trade. We're down 10 handles right now, but I intend to stay in this trade, right, for a while. And at a certain point, I'm going to pick a profit target and see what happens. So tick data is a kind of a weird thing. Yeah, there's all sorts of tick data here on NinjaTrader for sure. You could set it to what you want it to be, but that's not something I'm really good at. So Reza, what I would do is I would simply, what would you do for that? I would simply go ahead and pick a currency pair and just, use the volume profile on the Ninja charts. This is the Japanese yen. I just pulled that up, and here's the chart right now. Here's the volume profile right now associated with that. And this is a better trading proposition. It's a better, in my opinion, it's a better trading proposition. We're about to get stopped out on the NASDAQ, by the way. Way to go. I guess it's a long-winded way of me saying that. And you could add. Let's go ahead and add the euro. Let's see, you can go to the futures contracts, and there's the British pound sterling, 6B. 6E is okay. So we got stopped out, guys, on that. We'll go back and do a post-mortem on that trade idea. And again, if that was too rich if that was too thick for your skin, you could have done a micro, right? Instead of $4.90, micro would have been $49, right? And the micros in the micro contracts in the NASDAQ are there's more volume in them than there are in the regular market. In the classic E-mini, I'll call them. Okay, so again, this is low volume day, not a lot going on in the Euro FX, but here's what it is. So that's my recommendation, Reza. Open up, and there's micro contracts also in these currencies. There's micro contracts also in these currencies, where you could trade a smaller size contract if you want. So I would really consider trying, just trying to practice account here with Ninja. And I'm going to go ahead, actually, while we're talking about that, I'm going to just type that into the question and answer box. 14-day free. I know a lot of you folks already have Ninja accounts, and some of you guys have already done the demo, but if you haven't, that's a good place to start. It's a good place to start. And then, my pathway, my recommended pathway for this is going to be practice account to learn the mechanics, then small account to trade the micros. Maybe if you haven't traded futures before, you want to test the waters out, and you want to do a $400 micro account, which would be the minimum. That gives you the sense of trading real money and all the psychological baggage that comes along with trading real money. And then the next level is, okay, I want to trade the bigger size contracts like I just did. And you'll have the confidence. You'll know the mechanics. You'll know you'll have the taste of psychological trading with real money. And so that's kind of 1, 2, 3. That's how I like to consider that. It's 1, 2, 3. Christopher says, when using tick charts, the currency futures appear untradable to me. Yeah, I mean, again, my method, 10-minute method, I think is okay. And the euro does move at different times differently. Don't forget, when you're doing a euro US currency pair, there's two sides to the equation. And in essence, it makes the currency trading harder, right? You have to worry about what's going on in the US with respect to interest rates, money supply, flight to quality, and then you have to do the same thing on the euro side with respect to their interest rates and their Treasury Department functions. Because it's really an interest rate differential. The two currency pairs is what they are. So there's two things that could happen, right? There's two different central banks. There's two different governments. There's two different sets of economic reality. There's import exports. That each side, tries to manage through the currency management process. So, I'm sorry, I'm off. I didn't expect to get into the weeds here on the currency trading, but let's see what happened, or how badly do we get? Okay, so counter trend trade, bad idea today, didn't work out. And we see these big wicks on this particular market, and you're going to see bigger wicks in this market than you see in the ES, only because there's less volume and it's more volatile. Shoot over the ES. Our original trade idea did not happen, right? Our original trade idea did not happen. Actually, let me just kind of make this a little bit easier to see. And it's still dangling down here. So the question in my mind is this trade idea is valid anymore? Yeah, and I don't know. Let's manipulate this a little bit. Let's fix our fib line. We've met new highs. We're trying to meet new highs. And again, a counter trend trade here, I think, would end the same way as our NASDAQ did, badly. So I'm not really interested in that at the moment. And the pullback here now would be big pullback here, right? It'd be a big pullback here. So this what wasn't too conservative of a trade entry would be a very conservative trade entry, right? We would have to come all the way back down through the point of control and almost get to this little area of market weakness that we talked about earlier. Is it a bad trade idea? I don't think it's a bad trade idea. And I would hold it for a little while, but as we approach the afternoon, then maybe not. Maybe not. A more aggressive one would be a more aggressive trade idea would be up, over around the 61.8% retracement, around the point of control. These are both areas of interest that in this particular case corresponds a little bit. So that would be a more conservative place to try to enter, if you will. And this is going to, this low volume rally might trickle up all day long for all I know. I don't know. You are welcome. As I don't know how helpful I am, but I appreciate that. So Mark, there's I'll shoot you off an email with the rate sheet that distills all this stuff, because it's complicated, right? You have a commission, you have a exchange fee, you have an NFA fee per round turn, and you have a couple of different options with respect to pricing. It's all deep discount. It's all deep discount. You know, your commission rates per side, you know, on Ninja are going to range anywhere from, you know, 9 cents for micros if you buy a lifetime license to, you know, maybe as high as $1.29, which is still a deep discount commission per side. If you don't, there's actually a promotion going on right now. You open the door for my ends June 30th, save $100 on the lifetime license promotion at the top of NinjaTrader. So I appreciate that. You open the door for my gratuitous plug of the day. I'm going to go ahead and copy this in here. So if you are considering NinjaTrader, and you like the order flow plus, and you like to have the maximum extent of developer tools associated with Ninja, this is the way to go. With is the lifetime license, and a lot of folks do go this way, and it gives you way better commission rates. Again, if you send me an email and I will email you the rate sheet, you'll be able to find it on ninjatrader.com too. But I don't want to waste our time looking around for it. I'm typing in my email address here, jim.cagnina at ninjatrader.com. I'll shoot you out all the information you need to get started on that. So, you know, if you're trading a lot or even an average amount, that 9 cents per micro, if you're trading micros, this is actually a good deal. I know a lot of people don't like to pay up for front. I get it. I don't either. But it's if you're doing any type of volume, you're going to make it up in the long run. So you consider that as an option if you like NinjaTrader, which I do. Okay. I just realized I did that whole thing with this whole screen literally on the wrong monitor. It was a long weekend, folks. It was a long weekend. Anyway, that link I cut and paste into the into the chat. This is the page. This is what you're going to see when you click on that link. So feel free to do that. Reach out to me if you have any questions. You want to talk about it. Suresh asked, does Phillips Capital support currency futures? Yes, it does. Yes, they do, for sure. You know, it's a major CME group market. So, and he's referring to Phillips Capital because they're the FCM behind, one of your FCM options here behind NinjaTrader. But absolutely they do. All right, so Danny asks, this is from YouTube. This is a good question, actually. Let me read it out loud. Danny asks, what risk reward ratio do you recommend? In my answer is I don't recommend one. You know, what I want to do is I want to look at a candle. I want to look at a candle and I want to look at support and resistance and whatever other indicators I'm looking at and deciding what's a reasonable place to enter, what's a reasonable place to place a stop, and what's a reasonable place to place a target, right? That's the anatomy of a trade, right? 3 things, right? Here, let's do one right now. I'm just going to do one. We're going to go ahead and let's just sell one at the market. Okay, so now I'm short right now. Okay, and so that's the first component of the trade, right? The first component of the trade is your entry. You're going to be long or short, right? And now we're going to go ahead and place a stop above the highs here. We'll just go ahead and do a buy a market stop. So that's the second. This is the second. The second component of a trade is a stop loss, and then the third component, we'll just leave our existing entry order here as our target. Okay, so we have an entry, we have a stop, and then we have a target. This is, in essence, this is as complicated as trading gets. This is the anatomy of every single trade that's ever made, right? And you know, there's complications, right? You could do three unit trade and have 3 different targets or 3 different stop levels. You know, there's combinations there, but position, stop, target. That's the thing, right? That's what you get. And so the risk reward ratio on this, you know, you got 4 handles up and 5 handles down, and one might say, okay, that's good. We're trying to make more than we're risking, but it doesn't always work that way. It could be the opposite, right? We could be risking a little more to make a little less, and the reason is because the stops and the targets are put somewhere in some kind of rational, some kind of realistic place based on supply and demand and based on what the candle's telling you. So when folks, I get this call all the time. Hey, Jim, are you going to, you know, I have this strategy where, you know, I want to enter an E-mini S&P, you know, on the open, and I have an indicator that tells me whether I go long or short. And then I'm going to have an 8-tick target and a 4-tick stop. You know, and this trade idea works, you know, 2 out of 3 times, which means, you know, I'm going to lose once, I'm going to gain, you know, lose 4 ticks once, I'm going to gain 8 ticks twice, so I'm going to make money. Well, you're applying a rigid set of parameters around a market that is different every day, every minute, let alone every day. I mean, it's it's moving, man. It's moving. The paradigm is always different. So I'm not a fan of coming up with pre-configured risk reward numbers for stops and targets. I don't know if that sounds any good, but okay. Christopher says, I've become a little paranoid lately of floor traders hunting stop losses. There's no more floor traders, Christoph, I'm sorry, did I say your name wrong? So I would say you are paranoid, and in this particular case, they're not out to get you. You could be paranoid, and people could be also be out to get you, and that's a thing. But in this particular case, there's no more floor traders. There are algos, right? There are system trades, computer trades, and do some of those applications kind of try to extend the ranges a little bit to I don't know, hunt stops, I guess? Sure, very possible. But that's why you could outsmart them, right? You want to make sure that you give you, like in our last trade we did on the NASDAQ, you know, we didn't, you know, our stop was too tight. We got stopped out, right? Let's take a look. Let's take a peek. And now look we're trading solid, you know, this would have been a good trade maybe. I mean, we would still be in this counter trend trade if we wouldn't have had our stop where we had it. Right? So I guess I'm losing track of what my point is here, but it's just a matter of what the chart's telling you. I think is at the end of the day what we're looking at here. Okay, so don't be paranoid. Just keep in mind there's the possibility that your top is too tight. Give yourself some time, give yourself some patience, and then the intellectual challenge, of course, is all the chemical reactions that are going off in your head when all of a sudden your P&L is negative and you're freaking out. Because it happens to me, it happens to everybody. You can't help it. It's chemical processy. So you have to come up with tricks and ways to manage that so that you don't change your stop loss. You don't change things. You don't add on to losing positions. You don't do all the big mistakes that everybody does. Not everybody, but the people do. So keep that in mind. Discipline is the thing. Patience is the thing. So Phelan, my CCI, I have it positioned down at the bottom of the screen. You could position it wherever you want, but I like to position those type of things at the bottom, and then you could just drag them up and down with the cursor and just kind of position it to wherever you want. Yes, but Christopher, use wider stops, but use them scientifically, right? So you know, the tough part we had on the counter trend trade, and this is like, I'm not a fan of counter trend trades, is because our stop was in the cloud somewhere. There was no reference point candle where we had our stop. It was just up there, right? And so, you know, do you make it 8 ticks above, 12 ticks above, 14 ticks above? You know, it's a little subjective at that point. With a trend trade, it's a little bit easier because you'll have the wicks of the candles. You'll be actually able to see where to place it to make it maybe a little higher probability type of proposition. Yeah, so if I wanted to add another indicator, let's do it again. I'm just going to right click. I'm going to go to indicators and let's just pick one. once this thing opens up. And let's just again pick the MACD, because this is something we were talking about. I'm going to select it on the upper left. I'm going to add it. It pops on down here to the bottom. And then I could highlight it, and I could change my parameters if I want. I could leave the parameters the same, out of the box, whatever you want to do, change colors and all that stuff. Hit apply and OK, and it puts it down at the bottom of the chart. Really, really easy. Okay, so let's take a look at another thing. Let's go back up to this area, this top part here, this control panel up here, and look at our unrealized P&L. So now we're green 100, right? We're up 100. Now it's 87.50, right? It moves around as the market moves around, right? So as the market moves around, our unrealized P&L moves around. And when you want to figure out what your total P&L is, you're going to add the unrealized to the realized. And that's what shows up on this column right here, total P&L, right? Total P&L. So minus 490 on the NASI trade, plus 37.50, plus $50. It's moving around so far on the S&P trade. And then the total is over here in this column, right? So when you hear the word unrealized P&L, it means you have an open position and it's mark to market. And what mark to market means is it's wherever the last price traded is calculated versus your entry, and that gives you your unrealized P&L. So Christopher, I don't know the answer to that question, but I will for the next presentation. So I got to do some research on that. I'm not sure how the stock trading at the bottom of the chart info pops up here. I'll do some research for you and figure that out. All right, what kind of questions have I missed? We're almost 10 o'clock here. We're going to stick around. Let's go ahead and manage the trade we're in right now. Let's think about what we're seeing here. I want to go to the volume profile. I want to see where the point of control is. Okay, the point of control is, right around the 61.8% level. And then the bottom part of the value area is where my buy limit is. So a couple ideas here. Idea number one, the conservative idea is to move our target just north of the 61.8 and try to book profit, cancel the stop, all as well. More conservative is wait, be patient, see if we can get some momentum below the point of control or to the point of control, and pick up our buy. And that requires patience. And it's only 4 handles away. It's not that big a deal, but it's an idea that I like. So when I look at the recent contemporary candles, they are starting to peter out a little bit, right? So they're becoming smaller in size. They're, again, this area here of resistance is pretty firm at, around 42.12 and a quarter ish. It's more of a range than a line, but that area is so far pretty good. So I like where our stop is at right now. And there's volume below here. So from a trade management point of view, I'd probably leave this at least for a few more candles and reassess. Now, do you see that little surge upward here? That's because it's 10 o'clock. And we talked about algos and trading systems and all that stuff. And they kick in sometimes on the hour and on the half an hour because the previous set of data has been assimilated, right? So at 10 o'clock, you have the hour, you have another final hourly bar. You have another final 30-minute bar. You have another final 15-minute bar, another final 10-minute bar, and another final 5-minute bar that's in the can, right? The open, high, low, close of those candles because at 10 o'clock it's a new candle for all of those different time frames. And then oftentimes you'll see a surge of activity right at 10 o'clock or 9 o'clock or 8 o'clock, where you see momentum in price action because that previous information has been assimilated and has been worked into these automated trading systems in the computer trading, right? So boom, it hits, everything's executed, and trades are kicked off during, from 10 o'clock for the first 30 seconds or 15 seconds or whatever. And you see that little flush of activity that we just saw. All right, so the fib levels, they're really easy. Okay, let me just, I'm going to add that. This is a YouTube question from KKHYYYZ. I don't know how to pronounce that. I'm not going to try. But how did you put the fib levels up? You just right click. I'm sorry. I'm going to go. You go up to the pencil, right? The drawing tools, and then I'm just going to go to Fibonacci, and then I'm going to select it, and then I'm going to click and click. It's as simple as that. Click and click. Did you get that? And then if you want to, edit it with the properties or remove it, you could do that as well. Right click, another way, drawing tools. You're right clicking on stuff. Stuff's going to happen. It's going to give you information. Click and click. Going to remove that. All right. Any other we're going to take off in a minute here. We're almost done. Any last second questions? Any last pieces of information that you want? I have already typed in my email address in there. Feel free to reach out to me at any time. I'm going to cut and paste my phone number. Feel free to call anytime, except for 15 minutes after this presentation. I need another Starbucks coffee. And I think that's it. There is an events page on the Infinity Futures website that is going to have all the events published on them. Feel free to check those out. If you're ready to open an account, you want to try to take advantage of their lifetime license discount. I'm going to put the account link also in there for you. And then our notes, I'll add the notes here for next time. Counter trend, stop, level, problem. I'm going to call it a problem right now. That's good. That's my main note so far today. Okay. With regards to the profit targets, if you look on a daily chart or 4-hour chart and look for a recent highest point wick on a candle, then the market might or can head to that point. It can be a resistance area or support area of candles over a few days or weeks previous. Going back to the chart, same thing applies. Up and down trends, look back. Yeah, so I hear the gist of it is you could use different time frames simultaneously to determine your area, your points of interest, right? Where you want to get in, where you want to get out, and where you want to have your stop. For sure. I have a 10-minute. I'm a simple guy. This is kind of how I think, how I roll over many years of doing this. But I appreciate it. Seriously, all the comments are great. Appreciate you guys. These things are free. Come whenever you want. We're going to do them again next Wednesday. There's a schedule for a couple other events. I just cut and paste into the computer there. And I am going to leave you with, remember, trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. Although that could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your future trading account with risk capital. Not sure where you fit on that curve? Reach out to me. Let's have a conversation. Let's talk about it. How much day trade margin you should use, how much you should capitalize your account with, what markets you're interested in, all that stuff. We could customize a process or a thought idea for you. I'd be happy to do it. So feel free to reach in. Charles, you're welcome. Email address, I'll type it in again. It is jim.cagnina, jim.cagnina at NinjaTrader.com. And I'm going to hit the enter button there. And we're going to go ahead and do that. Right before I close this up, I do want to add 2 things. Be safe out there and be good to each other. Take care and thanks for being here.